of the show, and there's really only one thing to talk about today, isn't there? Jerome Powell, who's the head of the Federal Reserve, you know that his term is coming up in May, which means he could be replaced in May and there will be no problems whatsoever, which makes it kind of surprising that the Department of Justice right now has a subpoena and is investigating the Federal Reserve chief.
On Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas, threatening a criminal indictment. I have deep respect for the rule of law and for accountability in our democracy. No one, certainly not the chair of the Federal Reserve, is above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. This new threat is not about my testimony last June or about the renovation of the Federal Reserve buildings. It is not about Congress's oversight role. The Fed, through testimony and other public disclosures, made every effort to keep Congress informed about the renovation project. Those are pretexts. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation. I have served at the Federal Reserve under 4 administrations, Republicans and Democrats alike. In every case, I have carried out my duties without political fear or favor, focused solely on our mandate of price stability and maximum employment. Public service sometimes requires standing firm in the face of threats. I will continue to do the job the Senate confirmed me to do, with integrity and a commitment to serving the American people.
Now, he's being investigated into the cost overrides on the multi-billion-dollar Federal Reserve building remodel. Wink, wink, nudge, nudge.
So we're taking a look, and it looks like it's about $3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed. This came from us?
Yes. I don't know who does that.
You're including the Martin renovation. You just added
our entire capital.
Yeah, you just added in a third building is what that is. That's a third building.
Well, no, but it's a building that's being built.
No, it was built 5 years ago. We finished Martin 5 years ago.
It's part of the overall work.
But
So
it's not new.
Everybody understands that's not the case. The problem is Jerome Powell and the Federal Reserve Board is not following the lead of the president in lowering interest rates or increasing their balance sheet to give us lower mortgage rates. In both cases, of course, that would be a windfall for us in real estate, but it comes at a cost. You remember the last time we did this when we had rates in the 2s and the 3s? Boy, everybody's looking for that again. But the reason we're at where we are right now is precisely the reason that we had those artificially low interest rates. So to go back down to that point wouldn't make any sense whatsoever. After all, rates right now are under 6%. And if you look at this on a historic average, we are far beating anything we've done over the past 6 or 7 decades. So rates right now, they're fantastic. They're not the problem. And as much as you like or dislike either the president or Jerome Powell, I gotta tell you one thing. The guy doesn't strike me as a cheat. He's not actively and purposely sabotaging the economy. His policies might not be perfect, but I'm telling you, lower interest rates, which is the only bullet that the Fed has to shoot right now, is not going to solve our problems. Case in point, mortgage interest rates are lower now than they've been over the past couple of months, and properties still are not moving. Did you know this year properties are selling at a clip 10% lower than they did last year? Last year, which was one of the worst years we ever had on record. Even with lower interest rates, properties are still moving at a clip that's 10% lower than they were years previously. But back to the story at hand, the Federal Reserve and Jerome Powell. See, what we have right now as a result of the moves that the executive branch have made is a sell America policy, where we see stocks, bonds, and the dollar all lower on the same day. Why is that? Well, it's very simple. Uncertainty. We call this the debasement trade. The debasement trade is where investors rally to assets like gold and like silver, and investors are moving towards things that are more tangible that don't move on a government's reputation. like we see right now. So we have unemployment at 4.4%. We only gained 50,000 jobs, where you're looking for twice as many jobs. As a result of that, that should also push rates down further for those of you who are hawkish on rates. You see, with or without government intervention, rates are going to do what they're going to do, so leave it alone and things will be okay. Again, this is a natural correction, just like the housing market is a natural correction right now as well. If you look at any city in Florida or Texas, property values there are precipitously cheaper than they have been in the past. In fact, right now, one could say it's a buyer's market in Florida and Texas. And oh, by the way, 50% of metro areas right now are seeing prices drop. And the truth be told, on the trajectory we're at right now, we are going to see the entire country in a buyer's market, which, by the way, would be great for your business. It would be great for my business, and it would bring the lifeblood back to the United States housing market. So with rates down, properties not moving, and production at an all-time low, what is it that you need to do? It's very simple. As I speak with my real estate and lending partners on pods Tuesdays and Thursdays from 11 to 12 o'clock Pacific Standard Time, you can join. Fill out the information down below. There's no cost to it. You see, when I talk with loan officers, it's a game of haves and have-nots. It's either those who are closing deals, still closing deals, and looking actively and aggressively to increase their business, and those who have what I refer to as a one-loan mentality. What does that mean? You get a hold of a loan and you focus on that thing like it's the only thing in the world that exists. It's a delicate little hen that's in your hands. You have to look at your systems, not your closings, because when you have great systems and they're working out for you, everything seems to fall in its place. When you don't have great systems, all we have is that delicate little hen. So go out there and do what you know you need to do. I hope this helps. Hey guys, Brian Stevens here with the National Real Estate Post and Mortgage Shots. Listen, if you want to think about joining our team over at the Loan Factory inside the CB Loans Group, we do things differently. We crowdsource. We have the best tech stack. We have the best rates going on. Our loan officers close deals because we do it together, and then some. If you want a discreet conversation, fill out the information down below.